All right, hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks. And in this video, I want to highlight one of my favorite trade types with options. It's what we call our overnight pop trade. It's a trade that's looking to take advantage of options expiration. Normally, when you hear about expiration, you think about the monthly cycle, right? The options that expire on the third Friday of every month. We also have the weekly options that expire every Friday. But in the case of SPY, this is the S&P 500 ETF, we actually have options that expire every Monday, Wednesday, and Friday. We've got 3 different expiration cycles that we can take advantage of each week. Well, we know going into expiration, options become very, very active. The prices of those options are very reactive to both changes in stock price, but also the time decay aspect as well. If you don't get a big directional move, those options are going to lose value almost immediately. And this trade type is looking to take advantage of that. We're looking for the options to get less expensive. We're going to take a look at selling a credit spread, collecting premium up front, getting paid to put the trade on, and looking to buy the trade back to close out of the position the following day at a cheaper price. All right, so I'll circle back and walk through the options side of it in just a moment. Let's talk about the chart pattern. This trade type can be used on any stock or ETF. Okay, if you wanted to use it on Apple, Facebook, any of the ETFs, as long as they have weekly options, you can do this every week, or you can wait for the monthly cycle, the monthly options expiration cycle. In the case of SPY, going into tomorrow's session, we actually have options expiring tomorrow. As a result, we're looking to place this trade and close the position out tomorrow. Before 12 o'clock Eastern is ideal. Now, looking at the chart pattern, this is just a simple daily chart of SPY. I do have a variety of different moving averages up top, just a mix of simple and exponential moving averages, nothing custom there. And if we take a look, we have seen a pretty big range in this market. We have seen the big move higher back from end of June into July, August. I mean, it was just an amazing run higher. And then here over the last couple of weeks, we've seen a pretty big drop off again. We've seen a big sell off. As a result, we're left with price action currently bouncing around between this whole cluster of moving averages. We found support here today right on top of the 100-period exponential moving average. That's that blue line. Now on the upside, we have a whole mix of moving averages up above us. We've got the 20-period and the 50-period moving averages up above us. All right, so now we've got price action at a make or break zone. We've seen moves in both directions. What we typically see out of this pattern is a stretch, maybe a couple of days, where you get some indecision. You start to get some chop and some back and forth because everybody's waiting to see, is the move to the downside done? Are we going to move higher back up to the highs? Or is this just a dead cat bounce and we are going to roll back over to the downside? As a result, what we're expecting going into tomorrow is some indecision. I don't need a big directional move. All I need is for SPY to stay inside of a range. And I'll walk you through that in just a moment. So the whole goal here is to put on more of a neutral based options trade. So let's jump over to the trade page and let's talk through this. So I've got SPY loaded up at the top of my trade page. Down below, you can see we have all of these different expiration cycles available to us. I'm looking to take advantage of the September 23rd options, the ones with a 1 day left. They expire tomorrow. So I'm going to go ahead and open those up. And what I'm going to do is I'm going to sell an iron condor. I know the terminology can be a little funky. It's a little intimidating if you've never used this trade type before, but all I'm looking to do is to sell an out of the money call spread and an out of the money put spread at the same time. I'm looking to box the price in. I make money if SPY stays inside of a defined range. I'm not looking for a big move higher or lower. And I don't even mind if SPY moves back and forth over the next 24 hours. I just want it to stay inside of a range. Now, how is that range defined? Let's talk through that. So I'm going to go to the out of the money call options on the left-hand side, and I'm going to go to the 332 calls here. I'm going to right-click on the 332 calls. I'm going to go down to sell, and I'm going to select Iron Condor. Once you left click on Iron Condor, it is going to pop up an order down at the bottom of your trade page. We can then go in to that order and we can adjust the strike prices. So let's go ahead and click on Iron Condor. Down at the bottom, it pops up this order. And what I want to do is I want to sell the 332 call and at the same time buy the 334 call. I'm buying that 334 call to define my risk. I'm defining my risk on the upside just in case I'm dead wrong and we do get a big directional move tomorrow. On the put side, I'm going to sell the 326 put and buy the 324 put at the same time. Okay, I'm buying that 324 put to define my risk on the trade, just in case I'm dead wrong. Now, we got filled on this trade earlier today. We actually got a pretty decent fill price before the market closed, and we actually got filled. I just want to check it just to make sure I'm right here. 75 cents is what we got filled at. If I click on confirm and send, the 75 cents or the $75 that I'm collecting, that's my maximum profit potential. That's the most I can make on the trade. My maximum risk is $125. That's the most I can lose on the trade if I'm dead wrong. So we got a decent risk to reward ratio considering this is a credit spread. My break-even points, there's two of them here. That's what defines the range that I want SPY to stay inside of. So we take the 332 call that I'm selling. We are going to add on the 75 cents that I collected to put the trade on. That gives me my break-even point on the upside at 332.75. On the downside, we're going to take the 326 put that we sold, and we're going to subtract the 75 cents that I'm collecting to put the trade on. That gives me my break-even point on the downside at 325.25. Again, I don't care if SPY moves up, down, or sideways. It doesn't matter to me as long as price stays between 325.25 and 332.75. Over the next 24 hours, I have around a $7 range that SPY, it can move back and forth. I don't care. As long as it stays inside of that range, we can make money. All right. How does that happen? Well, we know, again, going into expiration, options are very sensitive to changes in stock price. They're also very exposed to time decay. These options are going to lose value very, very quickly tomorrow if price action stays inside of these two break-even points. So we will look to buy the spread back. I typically like to close these positions out first half of the day here tomorrow. We'll go ahead and look to see if we can buy the whole spread back. We'll buy the whole position back, hopefully for a cheaper price, and book the profit here tomorrow. My profit zone, typically I target 75% of my max profit on these types of trades. So if I can get filled on this thing tomorrow for between 18 and 20 cents or so, that's what I'm looking for. I actually have my closing order working right now for 20 cents. I've created a buy order to buy the spread back for 20 cents and see if I can get filled there tomorrow morning, book the profit. These are not going to be home run profit potential type trades. This is just a quick overnight play. I'm looking to generate some income. It's going to be a smaller income. It's not going to be a 500% return overnight. That's not the goal of the trade. This is the trade that's going to create a consistent source of income, a smaller part of my income, but it's more consistent. I've got 5 ways of making money on the position. It's a very high probability of success. So these are the types of trades that I love to place. Now, what is my probability of success? Well, if we want price to stay in between the strike prices of the options that I sold, so I want price to stay between 332 and 326. Well, if I take a look at the 332 calls, they have a 70% chance of closing out of the money. The 326 puts have an almost 81% chance of closing out of the money. Well, I want both of those to close out of the money. So now we're stacking the deck in our favor. We've got a 70+% chance of making money on the position. If I'm dead wrong, if we do get a big directional move, if the market continues to stay very active, the most I can lose here is $125 per spread. You can put this thing on multiple times, right? And still keep your risk at a manageable level. You can put this thing on 10 times and only have $1,200 at risk. Now you do it 10 times, now you've got $750 of profit potential. So there's a lot to like about this trade, a lot starting to stack up in our favor. So these are the types of trades. You can do this on any individual stock, Apple, Facebook, Amazon. I love to do it on the tech stocks. I'll do it on some of the financials. But with those, you're going to have to wait till the end of the week. Thursday into Friday would be when I would place those trades for the overnight pop trade. Okay, SPY is just one of those unique products that you can do this type of a trade a couple times a week. Monday, Wednesday, Friday is when those expiration cycles occur on SPY. All right. So if you have any questions on this trade, I'd love to connect. Feel free to post a comment here on the video or in the blog, or email me directly, mike@netpicks.com. I'd be more than willing to connect and help out with any questions you might have. So we'll continue to track this trade, see how it plays out here tomorrow morning. I'm going to wrap this video up here, and I'll be back with you guys later in the week with our next video.